you just reported your first quarter results. We do know that you had a strong quarter. You beat revenue. You also boosted your full year outlook. Stock is down about 6%. What's your takeaway?
Well, first of all, Norah, thanks for having me. We did report today. We were very pleased with our results. We're very pleased with where we're positioned for the remainder of the year. There is downward pressure on the stock. Sometimes you just can't quite figure out what's going to impact your stock at any given time. Stock price is a long-term game, not a short-term game. And we feel good about what's happened over the last couple of years with our stock price. Today's a little disappointing, but that's the way things go.
But I do know a lot of people think of your company as a brokerage firm, but you've also evolved into many other aspects, including services, infrastructure. Talk to me a little bit about how that has contributed to your company's strength.
Yeah. So brokerage or advisory services, as we call it, is one of our four segments in our business. So brokerage, advisory services being one, building management being one, project management being a big one, and then real estate and investment, which is where we do development and investment management work. Historically, up until the last 2 or 3 years, we've been heavily skewed toward real estate. We've been known as a real estate firm, even though far beyond just brokerage. What's happened over the past few years, and really when we made the Turner & Townsend project management investment, it was accelerated significantly. We've increasingly become an infrastructure services firm, and mostly critical infrastructure. So a lot of data centers, but telecom assets, energy assets, transportation assets. And by the end of last year, about 15% of our earnings came from work we were doing in the infrastructure area, and in particular critical infrastructure. So you go to the first quarter of this year, we had $3 billion of that kind of revenue last year. In the first quarter of this year, we had almost $1 billion. Mm-hmm. That part of our business is now growing over 50%. We are legitimately today a real estate services and investment firm and an infrastructure services firm. And I think that's a really important, profound change in our company. Mm.
I do want to dig a bit into some of the numbers. You brought up data centers. I do know that data centers accounted for about 14% of your profit in 2025. That's up from 3% back in 2021. Talk to me about that scale. Is there more room for growth as we think about data center development?
Yeah, well, it was data centers plus other types of critical infrastructure, mostly data centers, though. And yeah, everybody knows there's a big boom going on in data centers driven by artificial intelligence, but not just artificial intelligence. You have all kinds of things going on in technology that demand the use of data centers. Mm-hmm. We have moved through a series of acquisitions. Our company, since I've been in this role, has done over 100 acquisitions. We've done a number of acquisitions that have positioned us quite well in that market. We have an ability to attract talent, which is really hard, that serves that market. And as a result, we're attracting clients, we're attracting talent, and we're attracting M&A targets in the data center services area that have allowed us to move really rapidly in growing that part of our business, and we expect it to sustain for some time.
I want to talk about knee-jerk reactions. You brought up artificial intelligence. We talked about how the stock has performed today. If you flash back to February, we did see that CBRE was wrapped up in this broader sell-off of real estate services companies, in part due to the idea that people see a potential disruption for artificial intelligence on some of these industries. Is that something that you expect to potentially impact your business in any way? And where are you keeping your focus right now?
Well, you did see that downdraft in the first quarter, and we're continuing to see some of it. And people are trying to figure out what's going to happen with artificial intelligence and who's going to be a winner and who's going to be a loser. We look at the impact on our business. We look at it in 4 categories. Okay, so the first is we always look at strategically as the environment we're operating in morphs and changes and evolves. What are we going to do with our business to address that? And we've had a strategy in place for some time that says we're going to move in the direction of businesses with secular tailwinds. We're having tremendous success moving in this direction of the secular tailwinds associated with data centers and critical infrastructure, almost like anything ever in the history of our company. If you went back in the 90s and early 2000s, we saw some of that movement into the real estate outsourcing business. But this has been more powerful and more rapid than that. The second thing we look at is the products we have that we offer our clients today, independent of the new businesses. And right across the board in brokerage and building management and project management, we've introduced tools that are supported by artificial intelligence and supported by the massive amount of data we have that we think are going to make those products and our ability to serve our customers better. We're very, very bullish about that. The third area we look at is efficiencies that might be introduced. That's where we're going to cut some costs through efficiencies, but also replace some jobs. And we're very attentive to where that's going to happen. And so we got opportunities across those three areas. And then where you might be disintermediated. And there probably are places where there could be some disintermediation.
Where do you see that?
A little bit on building management.
Okay.
There'll be more and more technology associated with operating buildings. But given the size and complexity of the portfolios we serve, we think we're relatively well insulated. More importantly, we think that's small compared to the market-facing opportunities we're seeing on the growth side. So we think we're going to be pretty significant net winners due to artificial intelligence. And I think if you look at our recent results, at least the empirical evidence to date would suggest that's the case.
I want to do a bit of a pivot as to what's really been in all the headlines as of late, and that's been the conflict in the Middle East. I do know that CBRE is heavily invested, has exposure to the Middle East. Is there any concern at all that investors in the Middle East won't come back and may potentially stay domestic, stay local?
Yeah. We talked about that today. We have a sizable investment management business. We have about $155 billion of assets under management. We access considerable capital from the Middle East. We've downgraded our capital raising goals for the year by only less than 10% as a result of what's going on, because what we're already seeing is the capital sources in the Middle East regrouping and putting new plans in place to invest in the United States and other parts of the world. So that's going to have a little impact on our business, not much.
What do you expect that to be?
Less than 10%.
Okay.
Yeah, less. And by the way, we haven't really downgraded our expectations for earnings in that business, just some of the capital raising in that part of the business. If you look at the rest of our business, there's no part of the rest of our business where we earn as much as 5% of our profits, so it's not a real concern. Of course, what is a concern to all of us, real estate, critical infrastructure, data centers aside, is if what goes on there results in prices for energy going up to the point where we might have a recession, then of course we all got to pay attention to that.
Well, coming back to the U.S., I also want to talk about the tax environment. We know big cities like New York City have really been in focus. Are you at all seeing any particular business shift toward lower tax, faster growing markets like the Sun Belt, in particular with your business?
You know, our business, as you probably would expect in Texas and Florida, is quite strong in both those markets. We've seen a lot. Texas, we've seen tremendous growth. We've seen also considerable growth in Florida, and I think some of that is tax driven. But our biggest profit market in the world is the one we're sitting in here today, New York City. And we had a spectacular first quarter in New York City.
So you're not expecting any particular pullback or potential bearishness when people think about the New York City tax environment?
We aren't. I'll tell you one thing we talk about all the time is we have also a very big business in London and a very big business in Tokyo. And over the last couple decades, there's been the coming and going about, oh, is London dead? Is New York dead? Is it dying? Is Tokyo dying? All three of those markets are so big and so diverse and such a magnet for people and companies and so forth. They're all doing extremely well now, and we're bullish about the long-term prospects for New York and the others as well.
Well, speaking about the long-term outlook as we wrap, I want to understand, what are you optimistic about over the next 12, maybe 18 months, and what potentially keeps you up at night?
Yeah. I'm generally optimistic about our business in a broad-based sense. If you, and I'm answering your question in the context of our business. There's other parts of my life where I think I got grandchildren and children and friends and all that. But as it relates to our business, when you look across our business, we're seeing good strength across everything we do. I think part of that, I'm going to give ourselves a little credit for having built strong leadership team and made some smart investments in the right kinds of things that are allowing us to take market share and grow and, again, move in areas of secular tailwinds. But I think the environment has been more supportive than people want to give it credit for. We're seeing a lot of good activity in real estate, a lot of good activity in real estate services, and a tremendous amount of activity in critical services critical infrastructure services around the world that create opportunity for us, and I'm excited about that. I've been either a CFO or a CEO for over 20 years, which means I've done quarterly reporting of earnings for that many years. And I've said this a few times recently. In all those years, literally in all those years, I've never been so bullish about the growth prospects for my company as I am today.